Hey, what's going on? It's Dewan. We're back with another video. Street looks a little crazier than usual. It's trash day here in the Queen City in the United States. All right, man. It's been a wild weekend. Been a wild 72 hours for global markets. Global markets are they're going down, man. They're going down. And it's interesting. It's ironic because now I'm in a week. This is my week off, transitioning between jobs. And I'll be going into studying for probably about the next 2 to 3 months for my licenses to become an investment advisor. And I think it's one of the best moves I've made, because it's really a timing thing, because what's being anticipated in the US markets is interest rates to be cut. And this is being echoed from all the financial media talking heads. This is being shown in some other specific markets, like the Fed funds market, where what one CNBC newscaster reported that that market is showing that there should be 6 cuts by the end of January. That's what that market forecasted. There's talks. I think the Fed is considering a emergency meeting, and this all comes over just literally, man, in the last 40 hours. I think last night I first heard about it on Twitter. The Japanese stock market is now crashing. And so that affects the global markets, because a lot of countries, a lot of governments, they hold the Japanese yen. They use it as an investment vehicle because of the low interest rates to borrow the Japanese yen. So this is what the big Wall Street firms and a lot of these big corporations, they are taking advantage of the Japanese yen's lower interest rates by borrowing in yen at probably close to zero, and then using that to buy the US dollar, which has a higher interest rate, because we've been keeping rates up for almost the past 2 years, or a year and a half or so, I don't know. So it's almost like an arbitrage of the rates. You borrow low, and then you buy something that has a lot better rate, and so you should have a margin on yield. But what's happening now is, since the Japanese stock market's crashing, now we're seeing that that likely would follow Japan to raise their interest rates to try to restore some faith into their currency. And that's like the natural order when you have a financial market meltdown, because that weakens the currency when all of the fiat currency that's in the stock market leaves it, and then therefore it creates more of a supply, right, of that currency, because it's leaving the stock market. So their natural thing to do to save that currency, because once it collapses to nothing, you really can't bring it back. So they'll have to raise rates, which would squeeze the margin that these US investors that are taking advantage of the carry trade, they're pretty much getting liquidated at this point, and they're going to have to get out of that position of using or holding the yen and using that to get a rate in US dollar terms. So anyways, if I lost you, just know this, man. Stuff is going crazy right now, going bananas. And what does that mean for the cryptocurrency market and Bitcoin right now? It's everything's pretty much going the same direction right now. A lot of uncertainty. However, what we do understand is that Bitcoin was created specifically for what everyone knows or has a feeling that's going to come, and that's the Fed put. And the Fed put is nothing more than an idea that when markets start to go south, that the Fed will do what it takes to ease and therefore to not allow things to go to natural market course and crash. And in order for them to do that, they have to create money and buy bonds or securities to suppress the rate, and then that subsequently suppresses the rates. So this is where the talks of emergency interest rates come from, which essentially means that the Fed would have to print money out of thin air, so to say, is, and then this is what Bitcoin is pretty much a you could say a hedge of this monetary policy that is that deteriorates a country's currency, or the U.S. talking about the U.S. specifically right now, deteriorates that currency, deteriorates our cost of living and our quality of living. And Bitcoin with a fixed monetary policy, right? Only a cap supply, only able to mint a certain amount, which is cut in half every 4 years. No central issuer that's able to change that monetary policy whenever it fits them. So completely decentralized. And finite. Did I say finite? Yeah. And so this is why Bitcoin was created as a hedge. And this is why Larry Fink, Ray Dalio, Fidelity, a lot of investment advisors and bigwigs are saying that's why it is a flight to quality and something to buy, from the words of Larry Fink, something to buy if you are afraid, if you're more fearful of the world. So let's put Mr. Fink to the test. Let's put his idea and his theory to the test. Right now, we pulled back strongly. I mean, we went as high as $73,000 this year, and now we're hanging at the low 50s. But this is a great opportunity, in my opinion, to take advantage of the reaction of the world and this fear. So if most of the world is not jumping into Bitcoin right now as a reaction of fear, I think I know who's going to. It may be the largest investment firm by assets in the world. BlackRock will definitely take advantage of it, per what Larry Fink has said he believes its use cases for, to hedge currency devaluation. And if you're fearful of the world, if you're fearful of the world that we live in, of your government, of social geopolitical issues. The United States now is getting very active with warships, and seems to be getting more aggressive over in the Middle East region near Israel and all that. So if you don't think this is an opportunity here to, it reminds me of an opportunity that's very reminiscent of 2020, the COVID crash. And back in March 2020, when rates had to slam down to 0%, the market panicked because it was such a radical shift done by the Fed. There may be a great opportunity that's similar to that 2020 COVID crash. So yeah, that's all I gotta say. I had to chime in because it's getting wild out here in the financial world. It's wild out here in just everyday society. You know, it's just, if you're paying attention, if you got some dry powder, you may want to look into this asset, which I still think is the fastest horse in the race, Bitcoin. I know a lot of people are looking at their gold and things like that. Everything's down. So let's see which recovers first and which recovers more fantastically. And I think it'll be Bitcoin. Anyways, man, if you guys still collecting Bitcoin, let me know. Well, don't let me know. You don't have to tell me anything. But if you need help doing that, I got some sources down in the description box you can check out. Great book I wrote about 5 years ago in there. Awesome, awesome book. Sharing my thoughts, my ideas, my things I went through when I was starting out. Great wallets down there that I would recommend, and also a great place to get some non-KYC Bitcoin if you're looking to collect more of that. All right.